Hello, everyone. My guest today is Kevin Peterson. He was number 13 at a staffing industry startup that grew from 7 million to 65 million during his tenure and went public in 1996. The business still operates today in 26 countries with 4 billion in market cap. Today, he spent 20 years consulting before launching Growth Stack Inc., a SaaS portfolio on a path to IPO in the next 30 months. Kevin, you ready to take us to the top?
Absolutely. Thank you, Nathan.
You bet. So just to be clear, is GrowthStackInc.com a SaaS company, or you're buying SaaS companies under that label?
We're buying SaaS companies under that label. So GrowthStack is the whole co, and we're tucking in B2B SaaS.
All right. Talk to me about your playbook. Everybody wants to do this, but how do you find a deal? How do you price it? How do you convince the founder to sell? Let's start off maybe with your first deal. What's the name of the first company you bought?
Oh, wow. Okay. So trip down memory lane here. So 7 years ago, I started buying online businesses. It was not specifically SaaS in the beginning. I was building micro portfolios for well-diversified investors that were, really unaware that there was even a secondary market for online businesses. So oddly, the very first online business that I bought was a tattoo blog. Yeah.
You have any tattoos?
I don't have any tattoos.
That doesn't sound like a founder product match there.
Not so much, but I learned a lot from it. So my background is marketing. And so to me, that's, online business is, a lot of times what's missing are, marketing fundamentals in traditional sales funnels. So, to test the waters, I paid $900 for a tattoo blog. And as we mentioned, I don't have any tattoos, but I felt like, I need to understand content marketing if I'm going to go down this path. And again, like my background is marketing, but it was kind of a different beast and it was kind of new to me. And I wanted to see what would happen. So I bought this tattoo blog for $900. I hired a developer to improve it. I paid about $300 in development costs. And within 90 days,
where'd you find a developer for $300?
It was somebody overseas. And really all it needed, and this is going to, there are probably a lot of things I'm going to say today that are going to date me a little bit, but at the time, it was only 7 years ago, but at the time, there were many online businesses that were not mobile friendly. That sounds absurd today, but just 7 years ago, that was pretty common. So I paid somebody $300 to make it mobile friendly. I started writing the content myself. And, based on my marketing background, I understood that relevance is everything. So I started developing tattoo content around every holiday on the calendar. So there was a tattoo blog around Halloween, like the best tattoos for Halloween, and one for Christmas, and one for, everything. There was,
Fast forward for me. Do you still have the business?
Fast forward, yes. I don't. But that business that I spent, I invested $1,200 into this business, and then within 90 days, it was producing $750 a month in profit. And so then I just I lost my mind, really. I started buying businesses like crazy.
Business? What happened?
Actually, so unfortunately, that business eventually was penalized by Google. I got the infamous Google letter or email saying, we're not going to pay you anymore.
Okay.
So I stopped.
First SaaS acquisition, your first SaaS company.
Yes. So the first SaaS acquisition I bought was a company called PicReal. It's P as in Peter, ICREEL. And it started out the time that I bought it, it was creating those, quote unquote annoying pop-ups. We evolved it to be.
What year did you buy this?
Oh, sorry, that was 2015. It was late 2015.
How much did you pay for it?
That was around $1 million. It was our first 7-figure acquisition. Yeah,
that's a big deal. How much revenue was it doing?
At the time, it was it was over 300,000
in ARR.
In ARR, yeah, I want to say it was about 360, 370.
You paid a 3x multiple.
Yeah, we did.
Where'd you get the money from? It's not easy to come by. Is that just money?
Private investors. Yeah, so that was the funny thing. So yeah, to take you down the history here. So, I started building these micro portfolios for investors, and people, what people saw from my early experiences buying online businesses was that I was excited about it. And so there were a lot of people I know who were like, well, like I don't understand what you do. I don't know if I'll ever understand it, but here's $50,000 or something, right? Will you place capital for me so that I can participate in this and your energy behind it and get some dividends off of it? And so I started building portfolios to do just that.
Well, when did you do that, Kevin? When did you raise your first outside capital?
It was in that kind of 2014, 2015 time period.
And how much was the first tranche that you raised?
I ended up building 4 portfolios that ranged in size from, initially they were micro investments. So it ranged in size from $500,000 to $1.5 million.
So you had individual investors writing you checks to invest in your fund for $500,000 to $1 million. You kept them in their own portfolios and then used that capital to go buy companies under each of those 4 blocks.
That's exactly right.
Well, okay. And so if I was the one that wrote you a check as an investor for $1 million back in 2014, what were you selling me? What dividend, what returns would I be getting on my $1 million?
So depending on the portfolio, is between, let's say 13% on the low end to 22-ish on the high end.
Paid out quarterly?
Quarterly, yeah.
Got it. So if I give you $1 million, you're basically saying what? I would get $36,000 from you every 3 months?
Yeah, at the time I didn't have anyone participating at that level, but effectively, yeah, that's what we're paying out in the early days.
Okay. So that's how you scale. So this is interesting. You get PickReal done. By the way, how'd you find PickReal? Where should people look for deal flow today?
So that one I actually got through a broker.
Which broker?
FE International.
Okay. And what happened? Who, by the way, they charge 15% fee on the sale. Did you have to pay that or did the founder have to pay that?
If I recall correctly, we split the fee, and if I recall correctly, their fees were lower at the time.
Interesting. Okay, so keep going forward to PickReal. What happened next?
Yeah. So what happened was, we had we realized some very quick gains on PickReal. We had 46% year-on-year growth first year, and again, what I'm seeing in the SaaS space is that founders tend to be tech savvy, but not business savvy. And that's not a slight against any founders. It's just the way founders in this space are, right? So SaaS founders are very good at identifying a need in the marketplace, building that out, taking a product to market, going through proof of concept and building a small but loyal customer base. And then, and for the most part, I know that you've had people on your show that are enormously successful in this space and would challenge this, but most of the SaaS founders that I meet with that are selling their businesses are really widget focused, and they have no interest in building out a sales team. Yep. And they'll build some marketing funnels, but it's really not their thing, right?
So Kevin, and they don't want to. You using this playbook, keep telling the story via PickReal. So how much revenue did you go PickReal to?
I think the peak revenue was close to 600 ARR.
Okay. And what'd you do with it? What year was that? And did you sell it?
We did not sell it. And in hindsight, we should have.
So you still own it today?
Full transparent. No, we just recently exited that position.
Okay. And what did revenue decline to before you sold?
It was back down to approximately where we bought it. It was right in that 300 to 350,000 ARR range.
And when did you sell it? Just literally this month?
Within the last 90 days.
Oh, wow. Okay. How did you sell
just
it?
Close.
Did you use a broker?
No, at this point, again, 7 years is not a very long time, but in the SaaS world, it's enough time to build a very close, to become part of a very close-knit community. What I see is that, SaaS people in the SaaS space kind of know each other. People find me pretty easily. I actually started a SaaS mastermind this year, so I'm pretty well networked, and so I get deal flow from every source imaginable. And for me to exit a position, it's actually not hard for me to find a buyer on my own.
So what'd you end up selling for?
It was, we haven't actually disclosed this, and I don't know if the buyer would want this disclosed.
Breaking news. Throw it out there. Come on.
Yeah. All in it was sub 500.
Okay. So when you look back, at that whole deal. You buy it for 3x a million, you milk some profits, you grow it to 600.
Yeah.
Did you make money on the deal?
We did. I mean, ultimately we did. Again, in hindsight, it would have been better to sell it at the top of the hockey stick. And we didn't. But we owned it long enough and it produced enough cash flow long enough that it was certainly a profitable investment.
Okay, so that now you guys understand exactly how Kevin operates. Now, Kevin, give us the macro story here. How many SaaS companies do you own today, and what's total revenue added up across all of them?
Yeah, so today we are operating 4 brands, and we're on track for about $1.5 million ARR this year.
Where are you at now, like monthly?
We're just north of 100,000 MRR. Yeah,
that's great. Is there one brand that makes up the majority of that 100 grand, or is it pretty evenly distributed?
Yeah, there is a brand that makes up more than half, which is Longtail Pro.
Longtail Pro is the biggest. What does that do?
Yeah. Last year it was about 600, maybe close to 700,000. Yeah, 600,000. Oh, sorry. Yeah, so it's one of the longest keyword research tools on the market. It's been around for about 10 years, competing with SEMrush and Ahrefs and Ubersuggest. I'm naming my competitors on your podcast.
That's okay. So how do you, and so 700K top line last year, what did it do in profits?
It was around 200 and change.
And what do you,
250 maybe.
How do you reinvest profits? Do you take it personally as dividends and invest in real estate, or what do you do with it?
So we have, we've got a pool of investors. So actually, let me share another critical piece of the story. So about 2.5 years ago, I had an epiphany that the only place I felt comfortable placing investor capital is SaaS. And the reason for that is the recurring revenue component and the stickiness. And to me, that equals runway. So what I like about SaaS and what I like about SaaS for my investors is that if there are changes in the marketplace or changes in technology or changes in the competitive landscape, we have time to react to that. It's not, we're not beholden to Google and Facebook and Amazon to pay us. So the risk of having our revenue dry up overnight is very, very low. And if there are changes that are effectively threats to the business or new competition in the marketplace, we have time to react to that. I've got more than 20 years marketing experience, and a lot of that was spent B2B marketing. And so to me, B2B SaaS is it's the right fit for me. And I understand that space well enough to fairly represent my investors. Do
you have a team supporting you, or is it just?
I do have a team. No, I've got about 40 resources in 9 countries.
40 on the team. How many engineers?
So probably 15.
Okay. And how do you pay all of them with just $1 million of revenue?
So it just depends on the situation. Obviously a lot of overseas engineers are not high cost resources.
How do you
find we use them as needed?
Any of these marketplaces to find?
I do have a CTO on staff.
Oh, full time.
Yeah.
Is he recruiting directly out of universities in India, or are you using something like, Simform or Coditas or something?
No, he's from India originally. He's been in the US for about 14 years or 15 years now. It's very easy for him to draw on resources as needed.
And so how many full-time folks like him do you have?
About a dozen.
About a dozen. Okay, 12 people. This is great. Are you planning to raise more capital for your fund to go do more deals?
Yeah, we're doing that right now. So we are actually, and this is part of the Pick Real story as an example. We are in the process of churning the portfolio. We are looking at market. What I've heard over the past 6 months, it feels like everyone's going up market at the same time. So our investing thesis today is that we locate, buy, operate, and grow B2B SaaS businesses that are producing between $1.5 million and 7 million EBITDA at time of acquisition. We trade on a multiple of EBITDA, and we're looking in the 4.5 to 6.5 range.
Would you take that for Longtail Pro? I did $250,000 last year. If I offered you 4x EBITDA, would you sell it for $1 million all cash up front today?
We would be able to have a conversation. Let me just say it that way.
Smart answer. I almost got you. Could you guys feel it listening? I almost had him. That was so perfect. Almost. All right. Conversation. Fair enough. So that's what you're
the door will be open. Yeah.
The door.
Yes.
Any specific needs? Maybe like DevOps tools or CRMs or something else?
Yeah. So I love fintech. I'm not seeing a lot of fintech deals, but I love fintech. This is the way I describe this to anyone who asks really, is what attracts me to a SaaS business today is moat. So it has to be a defensible model. There has to be something about the model that makes it hard to replicate. So one of the challenges that we've seen, like using PickReal as an example, is anytime there's a new model, a new SaaS model that's getting traction in the marketplace, instantly there are cheap knockoffs, right? There are people around the world where their dev costs are very low. They can take something to market very quickly, and they can charge 10% of what you charge and get a small subset of the entry-level market. And they're happy about it. So today, what I really look for are SaaS businesses that are it would be either painful or costly for somebody to try to replicate it.
Kevin, this has been great. We're out of time. Few rapid fire things real quick. If you're at about $100,000 a month today in revenue across your full portfolio, where were you exactly a year ago?
It was about the same.
Okay, so you're about flat year over year. And then besides sort of the fund structure, you said you're raising right now. If I wanted to invest and give you $1 million today, what returns are you pitching me?
So what we're really looking to do, there's really two benefit statements that I can share. One is that we are operating in an opportunity zone, and we're using that legislation to pull SaaS into an opportunity zone and protect cap gains for our investors. The other is we are actively pursuing valuation arbitrage. So we're looking to pay 4 to 6x EBITDA at time of acquisition, roll this up, take it public in either a direct listing or a SPAC, and give our investors a path for that Y factor on the public market. Yeah.
How many customers do you have paying across all your 4 platforms?
It's probably 20,000.
20. Okay, so this is a low ARPU sort of play. 20,000 playing $5 a month sort of deal on average.
More or less. I mean, we have pretty standard SaaS pricing where most of our customers are paying in the, let's say, $79 to $299 a month range, and then we've got enterprise customers that pay $1,000 or more per month.
Well, if you have 20,000 customers paying $79 a month, you're doing way more than $100,000 a month in revenue. You're doing 1.5 million a month in revenue.
Yeah, we do have one. That number is skewed by one of our assets where the average ticket is $11 a month.
Yeah. If you're doing $100,000 a month in revenue divided by 20,000 customers, the average customer is paying about $5 a month, not $80 a month, right?
Yeah, but it just depends on the brand and the service. We have thousands of customers that are paying like $5 a month, and then we also have thousands of customers that are paying significantly more than that.
Totally understand. Okay, great. Let's wrap up with the famous 5. Number 1, favorite book.
Oh no, I should have been prepared for the book question, and I'm not.
Okay.
There's so many.
We'll say none then. Number 2 is
let's say none.
Is there a founder you're following or studying?
Again, there are many, but I really appreciate Richard Branson and his story.
Number 3, what's your favorite online tool for building your business besides any of your own?
Oh man, why can't I use my own?
Your own.
That's actually a loaded question too, just because I'm
pick one.
I'm kind of burnt on the CRMs I have been using. I don't know. I like Drip. I like ConvertKit.
Okay, there you go. Drip. Number 4, how many hours of sleep do you get every night?
Say that again. Sorry. Can you
sleep? How many hours each night?
I'm pretty good I function really well in the 6 to 7 range.
And what's your situation? Married, single, kids?
Married, kids.
How many kids?
3 kids. Ages, 27, 25, and 11.
That's great. How old are you?
I just turned 53 in February.
Congrats. Last question. What's something you wish you knew when you were 20?
It's I'm going to just repeat an adage that I'm sure a lot of people have heard. The hardest thing to do in business for any business owner ever is to raise $1 million. It's actually easier to raise 10 or 20 or 50. And you don't know that when you're 20. Everything sounds big and scary, and you just don't have a full appreciation for how the capital markets work, right?
There you have it. Growth Stack Inc. It's a mini private equity firm in the SaaS space. Their biggest brand is called Longtail Pro, does about $700,000 a year in revenue, profits $250,000, looks to exit companies for sort of like 6x plus EBITDA, looks to buy them at 2 to 4x EBITDA. There's arbitrage there. We'll see what happens next. He's raising his next fund to go take on new companies and hopes to maybe SPAC the whole organization, the whole holding company soon. Kevin, thanks for taking us to the top.
Thank you, Nathan.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company, or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them, and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.